Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, September 24th, 2013. We had definitely a distribution day and a negative day across the board, even though we had some real positive price action out of one of the NASDAQ heavyweights. That was Apple. But kind of from the get-go today, we had a fairly sloppy broad market side. The ES futures lost the value area very early in the session before the market opened and never really reclaimed it. It was just kind of a sloppy day where there was just kind of a bid vacuum, and players were on the defensive side. But even though they were kind of sloppy, we were really kind of set up for this as of Friday's close. We talked about from the scans from Friday. So today's overall price action was really just kind of a C+, even though we were down on all three sides. I'm just going to call it, a little bit above average, just because we didn't really take too much of a hit. The advanced declines were negative on both sides, but weren't really too bad. They were really trying to hang in there today, which actually kind of impressed me and really kind of kept us from really piling onto the short side. The New York Stock Exchange trend closed at 1.53, which is going to elevate our 10-day average. And the VIX index was up $1.19. It was up all day. Having the VIX up all day, and the negative advanced declines, and then the price only being down what it was, that's really pretty, to me, a pretty good internal showing. So I'm going to give the internal market today a rating of a B-. So we got a C+ for the price action and a B- for the market internal. So even though the market was red across all sectors, I think what it put on today was a pretty good showing. Overall. That doesn't mean I'm necessarily bullish at this point, but we'll talk about where the individual averages are and what they have to say. But it was a pretty good showing, I think, for the market overall. That doesn't mean tomorrow's not going to unravel and become a pretty good down day, but for now we're gonna call this a pretty decent day across the board, all things considered. All right, here's a look at the ES futures. Here, the ES futures. We still have our 13 exhaustion in place, which is a big deal. We tried to penetrate the risk level here, which is exactly the 7/8 level now. We're not able to take that out. We've settled right at the 10 EMA, which is probably expected after the down day that we had on Friday. If we had closed below this 10 EMA, we definitely would have downgraded the price action in the overall market. But we're definitely potentially on the threshold of turning to the downside, and you see the MACD is not that elevated and not that extended to the upside, but is definitely curling to the downside. Key levels to the downside are going to be 1687.50, and then the 50 DMA at 1675. To the upside, the big number is going to be 1718. No questions asked. That's the high close of the move, and also the risk level from the seeker. On to the NQ futures. The NQ futures today were pretty decent, all things considered. We did that big push out of Apple, but a lot of the individual NASDAQ components were really weak. We had a great short from Chris today in Tesla. I had a great short in Netflix, and all those high beta names really got whacked today. And we definitely did profit from those. We curled down, but at the end of the day, we're still above the 10 EMA. So until we cross below that, we're still short-term positive, just working this off. This little mild overbought condition. Let me change this to CCI. We've got this little mild overbought condition that we're trying to work off. Key support's going to be the 10 EMA. That's the big number here. If we close below 31.90, 31.91, we're gonna wind up turning short-term negative, but we're not there yet. So once we do that, then we're going to be short-term negative, and in all likelihood, we probably will. Reason is, it's the third week of October. October is generally a very negative month. It's usually actually more negative than October. October is known as a scary month because that's when there have been a lot of market episodes to the downside. But the reality is that September is usually more negative than October on average, especially after a positive August where things walk their way up pretty nicely, which certainly is the case here. Take a look at the bond side of the market here, the TLTs. TLTs today just nudged barely above the 50 DMA. They haven't followed through yet. A follow through would definitely be notable, but the one stopper is we're 9 bars up now in the seeker setup phase. So that's definitely going to be a headwind here. So definitely want to keep an eye on the bonds here the next couple of days to see if they line up with the broad market futures to see if we get some more negative price action. The oil futures today definitely were fairly weak, but they didn't break near-term support. You can see near-term support held here at 103 1/8. We're 9 bars down on the secret count, so now what we're going to be looking for is a leveling off or return back to the upside here off of the current market technicals. Gold futures just kind of meandering around. We're still really in a very congested area. There's really not much to say here. We just did this 9 bars down to the downside, held above on a closing basis the active static trend line. So that's that's kind of a small positive. But for now, we're still kind of trapped below, beneath this 4/8 level at 1375 and the static trend line. So that's really the range right now. Once we release out of this range, then we'll know a little bit more. But for now, I would definitely favor the long side until we lose that static trend line. I think internally the big feature here in the market with the advanced declines is that we have not been able to break out and bust through this potential triple top here in the New York Stock Exchange side of the cumulative advanced decline. Really can't trust any new highs in the market until this happens, and new highs in the market without this confirmation are always suspect. So right now this is definitely a negative divergence. Here's a look at the 10-day trend. The 10-day trend is still in play here. We're kind of curling back up from this overbought condition that we recorded just a couple of days ago at the end of last week. We're nowhere near the oversold threshold, so there's plenty of gas in the tank to the downside if the market wants to release it. Here's a look at the S&P TLT cross. We're threatening to lose the lower regression channel here. The key thing here is that we did get back up into the regression channel, but we never really challenged the high. So this could be an area where we're starting to see a loss of momentum. One thing to keep in mind, though, is that we did record 9 bars up in the bonds. So if the bonds start to retreat and head a little bit lower here, even if they don't make a new low, that should kind of arrest this slide. If this slide does continue, that's definitely going to be problematic for the overall equity bulls, and this is something that will be a confirmation that we're really starting to change trend. But we haven't done that yet, but we'll keep on top of this for you. All right, so as far as the individual sectors go, the utility index, which is mostly defensive, was top gun. Telecoms were fairly strong. There was some positive news out of Apple, and that kind of spilled over into a lot of telecoms. So good for them. Airline index was okay. The one takeaway here was the oil index. The XOY was outperforming the market today, so that's a real positive for the market. The negative is that the BKX was underperforming here. The housing sector was also fairly weak. The gold and silver index was near the bottom, but the commodity complex was weak across the board. So I don't think that means anything just yet. I think the one thing to note, though, is we did see some rotation here out of the banks. We did see that an outperformance today from the oil index. So if we can continue to see that rotation, that's okay. It's okay for the banks to be weak as long as the later cycle sectors are strong. We need to see some good action out of the transports, and we definitely need to see some good action out of the energy names. So that's something we have to watch out for. If that doesn't happen, then we're definitely going to be in more of a defensive mode, where if that rotation doesn't really want to take place, that doesn't mean that people are thinking expansion, and then we're going to have to get a little bit more defensive and posture ourselves accordingly. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.